Hey everybody, how's it going this morning? Hey. Good morning. Patrick, Sledge, Jeremy, Larry, Imuku, Kimberly, my lovely wife. Glad to see everybody. Rongamer, glad to see you, my man. David, Francois, Valerie, Craig. If you want to chat with me like these fine folks, all you gotta do, hit the button right over here. Everett, hey buddy, how's it going down there? Getting some good oil leases. Anyway, hit the button right down here, the green button, the overlay. Be a subscriber on the channel, and all of a sudden, a few seconds later, you get to chat with me live while I'm live. Now, if I'm no longer live, you're watching this later in the day, well, you're gonna have to leave a comment down below. Yeah, we've got FOMC coming up this Wednesday. So this Wednesday, fireworks coming up. Now, we might see a rally. The market might rally into that FOMC meeting. And Tuesday, 2 p.m., the minutes, whatever you call them, not really the minutes, but the announcement comes out. And then at 2:30, Jerome Powell can't resist speaking ever since he's been Fed president or whatever you call him, chairman. He can't miss out on taking the spotlight. So he'll go live at 2:30, do a speech, talk about whatever, yakety schmackety, the whole big thing. It doesn't matter. It doesn't matter. Whatever he says, it doesn't matter. Big picture, doesn't matter. They're chasing the market, and that's the way it works. I mean, Fed is always chasing the market. Everybody thinks, it's psychological. Everybody's like, the Fed sets the rate. Bullshit. They chase the market, just like everybody else. So. Morning, Harry. Morning, Alan, Dan, Jason, Andreas, Chris. Glad you could make it. Pat, how's everybody going? How was everybody's weekend go? How did it go? Let me know in the chat if you did anything spectacular. I posted pictures in Discord. The boss and I burnt through some money, and Sergio, morning. Anyway, let's kick it off with what's actually crapping in the markets here. Nvidia looking rough. Bitcoin, wow, that's a nice potential move, and we'll talk about it all. So, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. I may never get anything right ever again. This presentation here is intended to be informational, educational, and fun. Entertainment, It's not a recommendation to buy or sell any financial instrument. I might get some stuff right. I might get some stuff wrong. I mean, let's be honest. Nobody gets it right all the time. But if you desire personal financial advice, you got to hire and consult a financial advisor that has a fiduciary duty to take care of you and your financial situation. So make sure that you hire them. Don't hire a robot advisor. All right. I had a guy last night telling me that AI was going to take my job and AI was going to do better than I could ever do. Okay. Sure, I wouldn't trust the AIs to take care of my money, but that's up to you. Nobody looks out for your money better than you can. I'm telling you, like nobody. It doesn't matter who you hire, who you're paying. Nobody is looking out for you, but you. All right. I mean, if you really think about it, nobody gives a flying flip about you except you. I mean, got to be honest about it. So. Rolling into the calendar here. Today, not a lot crappening. We had a few Canadian numbers. We got some housing market index, some long-term purchases. Not really much. Now, tomorrow, again, not a ton of stuff. We got some building permits coming in about 8:30. Nothing really much the rest of the day. The FOMC meeting does start, though. And then on Wednesday, we've got the fireworks coming up at 2 p.m. right here. Federal funds rate, economic projections, FOMC statement, and then Jerome Powell's press conference right there. So set that in your calendar. That's going to be some fireworks in the market, more than likely. It's just a catalyst. I mean, it's not like, it doesn't matter what they say. It's a catalyst. So, anyway. Helped a neighbor's house fire under control. Whew. That's rough. I'm glad your son was on top of it. Hopefully that's the Boy Scout you're talking about. And house fires are never a good thing. The boss and my daughter dealt with that in the in my daughter's younger years. Anyway, all right. So then we have Thursday. Unemployment claims, of course. Philly Fed. Not. We're going to wrap up the week with not a ton of U.S. movers, but we have some, Great Britain numbers, some Swiss numbers. We've got some Euro information coming out on Friday. Great British Pound. Then 9:45, flash manufacturing and services PMI hitting. So it'll be an interesting week with the FOMC stuck in the middle and not much else. Now, we also have S&P 500 companies going into blackout. What does blackout mean? It means no more buybacks, no more share buybacks, and insiders that have pertinent information can't make any trades. So those are, I think, 50% of S&P is into blackout by the end of the week, if not more, and they won't come back out until they announce earnings in October. So this is it's kind of like a calm before the earnings storm. So a lot of these pent up reactions will kind of accumulate in the market until after the earnings, and that's partly why we see so much reaction on earnings. But it's just one of many reasons. It's not the reason. It's just one of many reasons. So when you prevent a bunch of people from being able to do any trades, especially people with more money, let's be honest. The people that run the companies have more money. The companies themselves have more money. You prevent them from doing anything for a period of time, then it builds up that, and then when you release it, it's like unleash the Kraken. We see all sorts of craziness hit the markets. All right, stuff I brought today. Nvidia down a bit. My NVDS, part of it closed out in the pre-market, crossing through 40. It didn't happen on earnings, but it's happening today. It's happening, sweetheart. I've been warning. Nvidia was going for a deeper retrace. Hard to argue that we're not getting that deeper retrace. Now, it's looking like we might drop on down here. Just, that's an echo off of something else. So keep it in mind. We can go right there. Right down into the roadmap line. All right. Now looking at the S&P 500, the headline: are we going to rally this week? And now this is key right here. We closed lower than we did right here. This is set up a 1-2. Look at that beautiful three-wave move to a lower low. If we set up another move higher into the FOMC, watch out. Watch out, watch out, watch out. We could have a large fast drop out of the FOMC meeting, taking us down into this vicinity, right down here near that prior low. Big fast drop. We could rally right up here. Big fast drop, a little bit of rally, and the final move. Of course, it could just, death blow it right down to the roadmap line on that FOMC. This is in the chart, and it is a power move for a move lower. It's almost fully cooked. Please be careful. All right. And we're talking about potentially upwards of a 4% move down, potentially in the market right now. All right. Be careful. This is like be careful. All right. Where will NVDS go? Well, we'll look at that in a second. Pop back to the other chart. I want to warn, we may see a little rally. If we do rally, we're probably set up. And as long as we stay below this high, below the, even coming in close to that, really sets us up for this power move down. All right. The only thing that kind of voids that is a breakout above these highs. This high first and this high second. A breakout above that kind of voids this setup. All right. That's the it's kind of the key levels right here and right here. Oh, got my circle in the wrong place. Move the circle, not the square. Move the circle. There we go. So these two are the keys. If we stay below those on any kind of bullishness going into FOMC, watch out. This is the target. That's around 4,300. A 4% move down. All right. Please be careful. The account you save may be your own. It's not being wrong that costs you money. Staying wrong. I am pretty neutral right now. I'm kind of adding a few positions to take advantage of this if and when it happens. All right. This is becoming a high probability setup. It is not like the highest probability setup at the moment. If we do rally right up into the FOMC, then it becomes like super high probability that we're going to see that out of the FOMC. It doesn't matter what they say. I don't care what they say. This is the price pattern that's set up right now. All right. Caution. Super caution at this point. Now let's go look at some of the other stuff happening, crapping. Looks like the market opens about 4 minutes. We had a big red candle on Friday. Quite a big candle. Didn't make a lower low than right here. Did then right, got lower than the rest right here. Highly cautious at this point. Yeah, I was looking at this is a simplified just daily closes chart. This kind of simplifies out everything. Simplifies out all the price action. This right here adds a little more context to it. And it still looks like we're going to drop out. This is still very bearish. Very bearish setup right here. That took back like 1, 2, 3, 3, 4, almost 5 days worth of price. Well, it did take back 5 days worth of price action. So 5 days all in one. We could rally a little bit and then watch out below. S5FI has just been struggling to get out. That's a lower high. We may be headed down to the bottom of the box, maybe even down to 20. We can very quickly do that on a plummet in the S&P 500. All right, futures overnight. Let's kind of look at this briefly. We're already starting out a little red. We probably need that little bounce into FOMC. If we continue lower here, it kind of mucks up the futures. That looks like 1, 2, 3, 4, 5 down. A little retrace. Probably want to hold in this 45.40 area on ES1 exclamation point. That's S&P 500 futures. Probably want to hold in that area and then turn down again. And it may take us a couple days, and we may do something like this, where it's like an A, a B, and a C right up in this zone, right like that. That may be what happens over the coming days, and then that FOMC meeting, 2 p.m. on Wednesday, we may see this. All right, be prepared for it. I wouldn't go all in short. I just ease up on anything you're profitable in long right now. At least lock in, put your stops in place, lock it in. Be careful, all right? In Q, looking a little more potentially bearish here, but that is kind of completing a 1, 2, 3, 4, 5 down. Probably could see the same retrace and then drop very easily. Now Russell, let's hop back up to the daily chart. Look at this. Look at this. That head and shoulders I drew in there, look, it's filling it right out. We break down below the neckline. If we break down below the neckline, the target becomes right down here where I drew that target. All right, that line right there is just the neck to the head to the neck, whatever, however you want to say it. Right there, break below, target down here, like 1765. That's looking like it's filling right out. Be careful. That's IWM. If you're unfamiliar with RTY, Russell, that's IWM. That's the ETF you can trade it with. Those puts might pay out pretty well. It's not quite as clear on this one, but we could see a move right down in this 173 area. All right. Crude continues to be a beast. Probably just going to go up and hit my target. I expected a retrace. That was the high probability thing. No retrace happening. Probably heading right up to this 93, 94 area. Right up there. Oh, we did not mute. We unmuted the monitor to record something. Now we got it muted. All right. GC. Bouncing off. I kind of speculated that we may see it rally right up here. If we reject that trend line once again, probably come back down in here and still working on a watermelon seed squeeze. Highly unreliable pattern. Could lead to a pop, could lead to a drop. Target down here, about 183. Target up here, about 2,000. Which way is it going to go? That's the thing. This pattern highly unpredictable. As long as we keep filling it out, it's like a watermelon seed. You know, squeeze it in between your fingers. You don't know which way it's going to go. I mean, some people, like, there's probably competitions on that, like being able to shoot it where you want it. But, yeah, coins on the list. We'll get there in just a minute. Coins on the list. So it is a mover this morning. Now, Bitcoin. Look at this, baby. We are potentially moving through the roadmap line, not just in the futures, but also in the spot market. And with any luck, continuation. This is the key resistance at this point, right here. We need to get through that. Above that, all clear for a potential move up to the 30,000s again. Potentially 33, maybe higher than that. The way we do the retrace, right off the high, down to the low. Highest high, lowest low, sets us up 33.9, possibly 36 on this next move. Looks pretty likely. Don't be caught unaware, unprepared. Look, that 618 hits right where we consolidated. Beautiful, beautiful. The conservative entry is above 30. 30,000. Looking for that move up in this zone, 33.9, like 34, and 36 above that. And we could do the ping pong thing where we pop up, retrace back to the breakout, and then bounce up. I do have the bigger targets up here. I think this could last us heading into the end of the year, kind of. We may see this rally continue right up into December, January. We may pull back into the Bitcoin halving event in March, April. Could see a little bearishness right after that halving event. We've seen that in the past. So there you go. Now, one of the things that happened on both Bitcoin and Ethereum, we got 3 green days in a row on both those charts. We actually got 4, which usually kicks off a 2-week rally. So just the near term, we may see a 2-week rally. Doesn't have to be big. Sometimes it's big, sometimes it's little. Just a higher price than we saw after those 3 green days in a row. DXY continuing to struggle higher here, but looks like it's on the path to go right up here around 108. Like I said, NVIDIA kind of kicked this off. Go chart, go. There's the market open. We may retrace that a little bit, but NVIDIA, I think, still headed down to the roadmap line. NVDS popping. This is a leveraged instrument. I cannot really predict leveraged instruments very well. We have a split in there. Maybe 43. If we're honest about it. Let's not shoot for the moon here. Did that sloppy right off the lows. Yeah, 42.60. We're right at the 40, which was the 1272. That was kind of where I expected it to go. Just based on this over here. We got right here. That was it. I may jump off the rest of my position. 42 is probably the most I would expect. NVDL plummeting out. This one's moving bigger. Probably, it is a leveraged also, so it doesn't always do the thing that I expect to do, but wouldn't surprise me to hit the roadmap line. This one, seen a lot of news about this one. Be careful. This is a 0-day option strategy. by an ETF. You imagine they won't approve a spot Bitcoin ETF, but they'll approve some gambling with 0-day options on the QQQ and make that into an ETF. Be freaking careful there. This one right here, a leveraged synthetic stock covered call ETF. You get some crazy stuff coming out lately. This is on Tesla, and if you wanted to do a synthetic stock leveraged covered call on and get paid a ridiculous dividend, look at this thing, 60% dividend right here, dividend yield down here, 60%. Crazy numbers. Yeah, it's over there on the other side. That's where I'm pointing. Wild dividend numbers. I mean, look at that. Crazy. But the dividend is volatile. Look, 83 cents in August, 58 cents. This one from July, $1.06. You're like, well, it's declining. Well, look at this, 80 cents was popping, and over here, 44 cents. So May, we went on a crazy rip and then dip right back down. Where are we going now? I don't know. These things are out there. Be careful. All right. Read the prospectus. Understand what they're doing. You know, that's just playing on Tesla. And right now, we're at the conservative entry for a potential breakout. We may retrace this a little bit, fill that gap before we can actually break out. It may just backtest that trend line area, which may or may not be in the right place. This thing keeps moving my lines around as it scales. So MSTR on that Bitcoin move, potentially going to break out. The conservative entry, or I guess the super aggressive entry here, conservative entry would be up here in this zone above 430, and then targets up here 526, 601. SQL just kind of chopping, hitting the roadmap line. Even though it's a big pop, that looks pretty bearish. And is this a reverse split? It is. Reverse splits are bearish. For a stock, please be careful. Do not chase that thing. LHX, that looks pretty bearish. I don't have much to say about that. That's a bearish chart. Coin, huge potential. I am long coin. This is a bounce. This is a measured bounce. It's a much bigger potential measured bounce. Let's talk about it briefly. Right here's the low. Right there is the high. Resistance at the prior high. We came down, hit the 50%. It's not the best measured bounce. I like 618. It's better. But we break out through that resistance right there at 89.90 area. This sets us up for a potential move. Let's readjust, enhance. This thing could be head up to this 260 area right up here. My target right around 200. All right, this may a little more conservatively, that move, right? Well, moving the wrong fib line. Go a little more conservatively. This right here. Those targets, 166, 235. Much more conservative. But we could see it break right on up into those higher numbers. Mara, potential for it to reverse here. This is a measured bounce setup potentially. That measured bounce potentially sets us up for a move up into the $100 price area. Riot has the same sort of pattern setup. Lots of fib lines on here. Clear this off a little bit. Draw some numbers on here. Draw some lines. Right here. Measured bounce setup. Nice potential. That puts the targets. Remove all these prior ones right up here, around 100. Beautiful. BTBT. Guess what? Same situation. Measured bounce potential. Excuse my stomach. What the heck? Sounded like I ate a frog. Measured bounce. This one's already moving up. Beautiful potential. Not quite as an aggressive target. Oop, moving the wrong thing. instead of the chart, right up there. Right up there. Move that one. Around 33. Why did JT buy so many BTBT contracts? That's potentially 30 times the money. If we do the move. Small risk, huge potential reward. My little $15,000 risk could become almost $500,000. Not too shabby right there. A lot of things got to go right, but not too shabby. ASML continues its march down. Looks like it's breaking below that support and may come down from the measured bounce around 523. SMCI continuing its march toward the roadmap line. ARM, I'm not going to have enough candle data to do much with this. 95% of IPOs are bearish and end up lower than the IPO price. Looks like this may get there sooner than later. Just be careful. I won't have enough data for a long time. The 144 EMA won't show up for 144 trading days. The 169 won't show up for 169 trading days. I won't have a roadmap line for at least that long. And it's going to take a few more days than that to establish a little piece of roadmap line. So I'm probably not going to mess with this for a year or more, in all honesty. So there you go. You got further questions? I got further answers in Discord. Come join me. Links in the description. And bias for the day. I'm kind of expecting a little rally. Not expecting it to break above this high or this high. Maybe just a little retrace in here. Let's draw it kind of. What could we expect? We could expect something like this. Right up into this 44.90 area over the coming days. And the other numbers I gave out earlier, still all valid. But right around there. And we hold that into the FOMC and then potential drop. All right. That's where we're at. See everybody later. And have a great day. I'll be back again live tomorrow morning. Give you a market update. Otherwise, have a great day, everybody.